Hello, my name is Robert Bowden. So good to be with you guys today. We have a really good topic to speak on, and I hope that it is helpful for you all as you are looking for prospective financial advisors, prospective financial planners, prospective wealth managers. It's so convoluted today in 2023. So today is what that's all about. Let's break down what is a financial advisor, what is a wealth manager, and how is that going to ultimately help me to push forward my financial plan. So today we will define what a financial advisor is, define what a financial planner is, a wealth manager. What is the difference between all of these different things? Again, it's 2023. You can get on TikTok, Instagram, Facebook. Everybody has financial advice. What's the difference, and who should I be looking to actually get quality advice that I should implement into my financial plan? We believe that we'll give you some insights today to consider that will be helpful in just making this decision. We'll talk through some of the similarities and differences between these particular titles or people. And then at the end, we'll talk through a few questions that you can bring up to your current financial advisor or a prospective advisor just to vet them and make sure that they are a fit for what it is that you're trying to do. So, what is a financial advisor versus a wealth manager? Well, I have a very unique perspective on this because I've seen both worlds professionally. I come from a background where I worked in a broker dealer that was very focused mainly on life insurance. And that's where I got my roots. I got my life insurance license first, and I was helpful to just learn that industry and progress through it so that I could ultimately get to where I am now. So I was a financial advisor before, where I was licensed for life insurance. Then I got my investment licenses, and I earned commissions on my insurance sales, and I earned commissions on my investments as well. So that's one of the main differentiations from these two. However, from financial advisor and wealth manager, but they are common. For a wealth manager, he's also going to be able to look at your portfolio. He's going to be able to look at your investments and dig into that. A financial advisor, of course, is going to look at your investments and your portfolio and give you some insights over that. However, the way that they approach it may be a tad bit different. For a financial advisor, they'll approach investment consulting or investment management as the end all be all. We are going to pull up your portfolio. We are going to go through all of what you have. We're going to give you some things that you can change, some recommendations that you can implement, and you are going to have better returns. Your diversification is going to be much better. They're just trying to take what you have and make that particular thing work for your financial situation. A wealth manager will do the same thing, but they're not going to prioritize it if that's not your priority. So the investments are a part of your financial plan, but that may not even be the first thing that they look at, because a lot of people in my age group at this point in life, they're buying houses, like they're getting married, they're combining finances. Their investments are important, but that's something that typically comes along a little bit later when you are established, you've got your foundation together, and things are going well. So in this case, it's going to be a difference of how they approach the particular client in answering these questions. The wealth manager, he's going to ask you, what are your goals? When do you want to retire? How are you saving currently? And why did you even do it that way? Did you look up some different ways online? Did you get some advice from some other people? He wants to truly understand the entire picture so that he can give you advice based on the entire picture. Whereas a financial advisor, it's kind of tunnel vision. I see this one thing and we can help you with this one thing, and that just be that. So a wealth manager is going to collect pay stubs. He's going to look at your tax returns. He's going to consult on your budget, your cash flow. He'll ask about current assets. He'll ask about your income versus your expenses. He'll dig in and pry a little bit just so that he makes sure he understands exactly where you are. And if investments is one of the decisions and things that you want to dig into right away, that's where you guys are going to go. I'm speaking for my firm as a wealth manager, that's where we would go. So investment consulting, investment management, definitely a financial advisor you'll get that from, and a wealth manager you definitely will get that from, but the approach to that thing may be totally different. I want to give you guys an example of how this can be different, a very specific example that I caught that I think will be helpful for you to consider. And the example is based on the fees that you may pay inside of one of these accounts. So I'm going to go over here. I'm on Northwestern Mutual's website right now, and what I did was click on Franklin Templeton. This is actually a fund. When I was selling insurance and investments, I used to use a lot of Franklin Templeton funds. And if you come to their website, you have the mutual funds. There's 802 mutual funds that you can choose from. And the first one that pops up is this Royce Dividend Value Fund. So the fund name is here. All of the different funds that you can pick from are listed below, and they have all of the information that you need across the board. So one thing that you want to pay very close attention to, number one, is the expense ratio for this particular fund. For this particular fund, Royce Dividend Value Fund, if you were to purchase this fund, that would mean that you're going to pay 1.62% off whatever your investment is per year. So the expense ratio accounts for the marketing of the fund. If this particular fund does a lot of marketing, if they have portfolio managers that are actively trading inside the account, purchasing and selling things constantly, this drives up the expenses for the account, and somebody has to pay for it, and that somebody typically turns out to be the client. So in an example, if you were to invest $100,000 inside of an IRA, the account doesn't even matter. If you invest that money, you're going to pay 1.62% for the year, which turns out to be about $1,600. So $1,600 off the $100,000 already puts you behind before you get any return or anything like that on top of it. Before you invest any money, you're already down $1,600. The second thing that you want to pay attention to inside of these particular types of mutual funds is the sales charge. Typically, this can be different depending on the mutual fund that you purchase, but for Class A shares, they typically charge a load fee, which means that if you purchase the fund, there's a sales charge that you are paying when you purchase that fund. So I'll go down to see if I can find one on Franklin Templeton's website. And this is one that I see here, Brandywine Global U.S. Large Cap Value Fund. So we'll just break it down bar by bar. If we go straight to the expense ratio, this one is 1.19%. So off of $100,000, $1,200 is taken off of that $100,000 for the first year before you get any returns. So it does go against your return. In addition, if you purchase this fund, you're going to pay a sales charge, which has a max sales charge percentage of 5.50%. So if you do the math on this sales charge, because it's Class A, is charged up front. So as soon as you invest $100,000, 5.50% is taken off. And then at the end of the year, 1.19% is taken off of the account as well. So if we do the math for that quickly, I'm just pulling up my calculator on my phone. $100,000 minus 5.50% is $5,500. So that's left $94,500 before we get a dime back by way of return. And then we have 1.19%. 1.19% off of that is $1,100. So before we do anything, our Initial investment was 100,000. Now I have $93,375 to invest, and I just hope to make that percentage back in the first year because this is a very expensive fund. So typically, when you invest and put together a portfolio, you have more than one mutual fund. You might have 5 or 6 of these inside of your portfolio, and if they're all this expensive, you're paying a lot of money. And also consider the fact that this sales charge, whenever you trade in the account, you're being charged this 5.50%. So you can see the conflict of interest here. I'm an agent who gets paid on commission, and I am able to make these changes inside your account. Even if it's not the best thing for you, I can do it because it's suitable. That's the financial advisor's perspective. From the wealth manager's perspective, we are fee only. We do not get commissions. We do not get kickbacks from any portfolios, from any funds. Our clients pay us a flat fee, and that fee is agreed upon, and that's the only thing that you pay. So that looks a little bit different from the wealth manager's perspective, because now I'm going to take you over here to Schwab's website. As a wealth manager, I'm looking for different ways that you can actually expand on what it is that you have. So if you can make some changes to lower those expenses, I'm probably going to lead you in that direction. So you can see a few of Charles Schwab's funds that they have available for investors. Everything is under 1%. So in this case, if you have $100,000 and you want to invest in this particular fund, in this mutual fund, you spend $20 a year rather than $1,200 a year. There is no sales charge. There is no initial investment fee at all to invest in these type funds. I'm not getting a commission. Schwab isn't getting a commission. Nobody's getting a commission because there's no middleman. You can go straight to the source, get what you need for a much more inexpensive way of doing it. So just something to consider. Fees are a very big deal, and fees can eat away at your potential return. So you want to be conscious of that when you're making those decisions. The next portion that I want to talk about, the difference in a financial advisor and a wealth manager, is that a financial advisor, everything like we had mentioned is going to be based on your assets, based on increase in returns. It will be very investment focused. For a wealth manager who is now able to not take part in the product side, but just to focus on what this client needs, takes away all of those conflicts of interest, and you'll see that they're driven to tackle any topic that is priority to you. So we want to prioritize what you prioritize, and whether that be talking about investments first, whether that talks about cash flow, whether that talks about insurance, family planning, whatever's top of mind for you is the thing that we're going to talk about, because I'm here as essentially a think partner. I'm not the quarterback anymore. You're the quarterback. I'm the coach that's telling you all of the different details of how we're about to win this game. So we put the game plan together and we talk through it. So this chart is here for you to just get an idea, or to at least vet who you're working with today and what they're actually doing for you when it comes to your financial plan. So an advisor, a financial advisor, I know that they can sell products. They can sell you an insurance product. They can sell you an annuity. They can sell you some investments. I know that they can sell you a lot of things, but what other things are they actually looking at and digging into with you? And based on this, you may be able to check some of these boxes. I don't know everybody. There are advisors who are able to do a little bit more, but overwhelmingly, a wealth manager is going to be able to cover all of those different topics for you over a set period of time. So for any particular person, these are typically the topics that we go through together, and our meetings are focused on getting all of these topics done within 1 year. And it's a 1 year engagement. We get through all the topics and we pick our top 2 or 3 to start with. So in this case, just as an example, A financial advisor, if you come into the door, you say, hey, listen, I have like $150,000 over here, but what I really need is to figure out my cash flow, like my foundation. I don't feel really good about it, and I feel like I need to dig into that so that I can build on top of it and get things going in the direction that I believe that they should be going. An advisor will probably look at you, say, hey, that's awesome. Let me see your portfolio, and we can kind of dig into it from there. The wealth manager is going to say, okay, we can push the investments to the side for now, and we'll talk about those cash flow or budgeting needs that you have. So, just as an example, things that I look at when it comes to cash flow planning or budgeting. Let's just say that you have a young couple, they're planning their family, and they bought their home a long time ago. They're now starting to have conversations about kids and things like that, and they're looking for different ways to increase their cash flow as it stands today. So a wealth manager is going to walk you through the process to put a budget together. What are you spending? What's your income looking like? And what are you spending? What are your expenses? And maybe we see that since you bought your home, the interest rate is a lot higher than what the interest rates are now. We go through, we do the analysis, and maybe you can save yourself 3 percentage points in interest. That may save you X amount of dollars. Why don't we consider refinancing, getting some cash flow freed up, and allowing for you to use that same money to make a different decision? That's just one example. We'll look for different ways to not only just increase your portfolio returns, but look at the whole picture. What things can we do? What things can we change that will help your overall plan? And that can be from your cash flow. That can be from your tax planning. If cash flow is a problem and you pay a lot in taxes, maybe you're a business owner. Do you have a employer sponsored plan, a 401k, a SEP IRA, something like this to decrease your taxable income? These are things that a wealth manager will help you to talk through each and every time. So here are some different questions that you can ask your advisor, and I'll just go through these fairly quickly because we did touch on them briefly throughout this. But one question you can ask that's always going to be great: how do you get paid? That's a pivotal question for any advisor or wealth manager that you're going to work with. Our answer to that: you're going to pay a flat fee every single year. You'll know exactly what that fee is. We do that for some clients. Alternatively, we do have what's called wealth management, where you're just going to pay a percentage of assets. There are no kickbacks, there are no commissions, nothing like that, or any surprise fees that pop up. What you see on paper is what you're going to get, and that's it. For a financial advisor, they may say that they get commissions on the product sales of insurance, of annuities, of different investments. If they're doing that, you know that when you ask this question, all of the conflicts of interest arise, and you can see if that's a decision that you want to make or not. So that's a great starting question to ask any advisor or wealth manager that you're going to work with. Number 2 is, how often will we meet? For financial advisors, because they're not really digging into all the list of topics throughout the year, if you're only focused on the investments, it seems as though it's not really a whole lot to do that would require us to meet multiple times throughout the year. For a wealth manager, because we're talking about the investments as a piece of the entire puzzle, we're going to need to get through these things. And for us, like I had mentioned, we meet 4 to 6 times throughout the year. Some people more, some people less, but typically 4 to 6 is plenty of time to do that. We typically meet every quarter. But for some people in their schedules, some people like more, some people like less. Another one is, are you a fiduciary? A fiduciary in this industry is someone who is mandated by moral law as well as legal law to operate in the best interest of their clients. Now, I know that this sounds like like everybody should do this, but that's not how our industry is set up by the state's regulations. If we don't act in your best interest, we have to pay for that on our end by way of the state. For other people who are not under that same oath, they just have a standard that is just giving you what is suitable. So what is suitable could mean that there are other alternative funds that were lower, but I chose this one because it fit your investment objective and it worked out fine. So that's okay in certain industries, that's okay for certain financial advisors, whereas it is not okay for certain wealth managers to be able to do that. So you want to make sure that the person that you're working with is a fiduciary. And then what are your qualifications? This is a big one. The creme de la creme of financial planning licensing is going to be a CFP. I do not have my CFP yet, but I am studying to have that within the next year or two. It's important to me. I know the significance of having it, and I'm going to make sure that I do that. However, I do have the licensing to be still a fiduciary, still in the industry the way that I am, and running business the way that I am. But everybody does not have those qualifications. So it's important that you know exactly where your advisor stands on this subject. So those are four questions that you can take with you. I hope that this was helpful for those who have financial advisors, for those that are looking for financial advisors or wealth managers or whatever you want to call it. I hope that you use this information to vet whoever it is that you're going to work with and get the level of service that you need. Not the level of service that the person is just offering and that they're giving, but get what you need and make sure that you're getting that thing. And reach out if you have any questions, whether it be our firm or another firm in our network. We want to make sure that you get exactly what it is that you need to push the ball forward when it comes to your planning. So please feel free to reach out with any questions. I hope that this was helpful, and I'll see you guys next time. Have a great day.